So the pros again, now real quick for our clients, we do this for them, right? So we have discretion on the investments that we manage. So our clients don't have to worry about it. We're rebalancing for them. But a big pro here, and then you can rattle off a con.
Yep.
We'll go pro con here, Corey. But a big pro is that basically rebalancing helps maintain a desired risk level by preventing overexposure to any single asset class. So again, even if you had one stock that's really doubled or tripled in value, when you rebalance, you get that exposure back down. So you're not overexposed. What's a con, Corey?
What about the transaction costs though, Jake? Doesn't frequent rebalancing, isn't that going to create transaction costs for people?
It can. It can. Now, again, it depends on your custodian or your 401k. So you want to be aware of that. So you definitely don't want to overtrade. Now, we don't charge a commission to buy or sell, Corey, with our clients. So our clients aren't worried about that. But you got to be careful. If you're working with an advisor that is charging a commission to buy or sell, you need to be aware of what that cost is. That's another good point. Another pro, though, Corey, is that it encourages a systematic and disciplined investment strategy. So with our clients, what we like to do is we use a 5% tolerance risk. So again, in my example, if you get to 65, that's when we rebalance. We're not doing it if it's at 61% stocks, 62% stocks,
Mhm.
because then we're micromanaging the portfolio a little bit. So again, with us, we use a 5% tolerance. And then we'll also, though, look at it on an individual stock basis. And if it's out of whack, we'll definitely rebalance.
But Jake, what about the taxes and the tax implications? If we sell assets to rebalance and we trigger capital gains, what if I don't want to pay any taxes?
Very important, Corey. And I think clients miss this a lot. Taxes should be a secondary consideration, not the primary consideration. I would much rather make a return for my client and lock in a gain than save them money on taxes. And I know clients love to save money on taxes. It's so weird to me, Corey, that a client would almost like to save $5,000 on taxes versus make $10,000 in a portfolio. That's just human nature, right? But again, if we can make you 10 grand versus saving you 5, I'm going to make you the 10 grand all day long. Because what's happening is that is helping support your financial plan. If you have a higher net worth or more money, more times than not, now it's not every time, but more times than not, that's actually a good thing. So gains are good. So yes, we want to be mindful. Obviously, it's the end of December. We're not going to go start ripping band-aids here and making crazy trades when we know we can do that in January. But taxes are a secondary consideration, not the primary one.